reported a strong set of Q1 numbers. The business momentum was led by the NII growth and lower provisions. The asset quality has witnessed an improvement, which was aided by higher write-offs. To discuss this and more, we're joined by Rajneesh Karnatak, the MD and CEO of Bank of India. Mr. Rajneesh, thanks a lot for joining in. I just wanted to start by understanding what the outlook is as far as loan growth is concerned. In the quarter gone by, it was a bit, on the tepid side. I mean, deposit growth of around 9%. Advances growth is still in double digits, say 11% growth. But overall, for the full year of FY24, what are you looking at in terms of loan growth?
Yeah, as far as the credit growth is concerned for FY24, we are giving a guidance of growth of around 11 to 12%. Deposit growth would be around 10 to 11% for FY24. The backdrop for that being that we have a robust pipeline as far as corporate credit numbers are concerned. We have a pipeline of nearly 40,000 crore, which includes both term loans, short-term loans and working capital loans. Apart from that, we have also sanctioned around 30,000 crores of sanctions we have given during this current financial year. That will also help in the growth of the overall corporate book, and overall our strategy is to keep the RAM advances at 55% and corporate advances at 45%. So we are very confident of achieving the credit growth number of 11 to 12% for FY24.
Okay, Mr. Karnatak, welcome to the show. That's on credit growth, where you're expecting double-digit credit growth going into the next couple of quarters as well. But I just wanted to discuss your write-offs this quarter, which has spiked all the way to close to 4,000 crores, 3,831 odd crores. It's higher than what you did in Q4 of FY23, which was 1,900 crores, higher than 2,340 crores same time last year. What resulted in this huge spike up in write-offs, and what is the trajectory expected?
So as far as the write-off is concerned, we had a good cushion as far as our profitability and other provisions were concerned. So we had done a total write-off around 3,800 crores if you see during the quarter in our balance sheet. Out of that 3,800, around 3,000 crore was a write-off in our corporate book and the MSME segment, and something in the retail segment. So that was part of the overall strategy for cleaning up our balance sheet.
All right. Could you give us a sense of what the NIMs are likely to be going forward? You're targeting deposit growth of 10 to 11%, 11 to 12% is your loan growth. Cost of funds would be increasing, I presume, going forward for you as well. What are the NIMs that you're looking at? Because quarter on quarter, there was a slight moderation.
Yeah. So if you see our numbers, our yield on advances have improved year on year. Our cost of funds and cost of deposits have also increased, as you rightly said, but they have increased to an extent which is lower than the increase in the cost, our yield in advances. So as far as our NIM is concerned, we have a NIM of 3.03% as on as on June 23, which we expect to be around the same number at around 3.05% as on March 24, for the simple reason being that we have a very strong retail franchise in 5,200 branches, and our CASA deposit is around 44%, and the growth in CASA deposit in the absolute number is 18,000 crores year on year. Apart from that, our bulk deposit is only 11% of our total liability side. So 88% of our total deposit is basically retail deposit, which will help in controlling our cost of deposits and improving the net interest income and finally the net interest margin.
Okay, on the loan growth, I was just going through the breakup of, the different segments that you cater to. The MSME segment is seeing a bit of a slowdown. I mean, it's just single-digit growth, 9% growth that you've seen, while retail, agri are all double-digit, and of course, auto is up about 20% as well. Can you tell us, going forward, do you continue to see pain in the MSME loan book? And what about the other segments? What kind of a growth are you looking at?
So overall growth we are seeing in our loan book, when we are giving a guidance of 11 to 12%, as I said, our RAM credit will grow, book will be around 55% of the overall book, 45 will be the corporate book. Within the RAM segment, if you see, as you rightly said, that the MSME book was below 10%, some of which is attributed to the write-off also. We did some write-off in the MSME book, because of which the overall number got reduced. Apart from that, in the corporate book, we will be giving credit in the infrastructure, whether it is road, power sector. In the industry side, we have a book which is a sanctioned book and the pipeline book. In textile sector, steel sector is there, and pharmaceutical is there, food agro is there. Lot of sectors are there in the industry also. But there has been a degrowth as far as the corporate sector in the side of the state government advances. That has been a conscious decision by us. If you see the data, 15% of our state government advances has come down. So that is a conscious decision we have taken to come out of the state government book. And we will be also giving the growth in the numbers where there is margin and where there is commercial sense to us. So we have left a few transactions during this quarter in the AAA corporate book where the rates were too fine. So in the end, we want to grow our top line, but the more important is the operating profit and the net profit. So any business which we do should make commercial sense. That is the basic idea.
Okay, so just leave us with some guidance then on the asset quality, because you did mention that there is some amount of write-offs from the MSME sector which you have undertaken. What will the write-off picture, the upgrades look like, as well as your slippages? These three figures, if you can just guide us on a quarterly run rate basis.
So as on the credit quality side, if I say that we have a gross NPA which is 6.72%. For the guidance for March 24, we are giving a guidance of less than 6% of the gross NPA. And as far as the net NPA is concerned, we have touched a figure of 1.62%. There also we are giving a guidance which will be near to 1% for the net NPA side. So that is the number which we are trying to give for the guidance for March 24.
All right, and if I look at your annualized credit cost as of this quarter, it's close to around 0.6%. Do you think that's a mark that you would maintain by the end of this year?
Yeah. For the guidance on credit costs also we'll be maintaining that, because slippage ratio, if you see, has improved year on year, and the guidance for the credit cost will be also at around 60 to 65 basis points for March 24.
Okay, all right, Mr. Karnatak, thanks a lot for joining in and speaking to us about the bank and the way forward. That's a detailed review on Bank of India and the way forward for the bank as well. Let's slip into a quick break. On the other side.